Welcome to another episode of Talking Expat Taxes. If this is your first time watching or listening, my name is Alex McGowin. I'm the owner of McGowin Tax, where we help small businesses and individuals with their international tax compliance, international tax planning. Very excited to talk to our guest today, Arielle Tucker, who is, I'll let her introduce herself and specifically what she does and your firm, but I wanted to give a quick intro, to why I think this conversation is so important, especially for my clients. What I do is help on the U.S. tax side, right? So I'm helping U.S. individuals and businesses comply with their U.S. taxes and pay the least tax possible at the end of the day. But it's a coordination effort because if we're not doing the same thing on the foreign side, so assuming it's a taxable jurisdiction, if the person in the foreign country we're not coordinated, then what we're doing in the US doesn't matter. So there's always this coordination effort I'm doing. But what I found is probably with individuals at least, the most complex part of the tax side that happens is the investment income. So retirement accounts, how people invest, expats outside the US, it creates a lot of complexity and there's a lot of uncertainty around it. And that's a third pillar, I think, of coordination that's required and probably the hardest one to find. I have a lot of clients that have good US tax advisors or good advisors in the UK, but finding someone that also understands the complexities of how a UK investment, or whatever country it is, can impact their US tax position is very unique. And it's one of the pillars or coordination efforts that's extremely beneficial. And I think that's where you come in, Arielle, and I think that's where you've built a very useful firm for people and something that's really like getting at the heart of what a lot of people are trying or struggling to find when they're expats living outside the US is how do they invest money and how do they do it to where they're not shooting themselves in the foot in one jurisdiction or the other later for retirement or early on. So excited to talk to you about this. Arielle, thanks for coming on. Yeah, thanks for being here.
Yeah, thanks so much for having me, Alex. I'll do a quick little introduction and then I'm really excited to kick off this conversation because I totally agree with you. I always think about cross-border as it's a team sport. It's not an individual sport. There's really no just one professional, I think, that can do it all. I'll start with my introduction, I guess. So my name is Arielle Tucker. I'm a certified financial planner. I'm also an IRS enrolled agent. I love to, speak tax and geek out on tax issues as well. I specialize in cross-border planning for U.S. citizens who are moving to or living in Europe. And specifically, my focus is really Germany and Switzerland because those are the countries that I've been living and working in for over a decade now. I've been featured in Forbes, I write for Bloomberg Tax and CNN, sharing insights on the unique challenges expats face with taxes, investments, and retirement planning. I'm also the host of Passport to Wealth, which is a podcast where we explore what it really takes to build wealth and security while living abroad. I'm so excited to jump in with you today and kind of go through what it looks like from a team. I came from a tax background. You are a tax professional. I started my career, preparing 1040s and really realized when I was especially in international tax, no one was thinking about the planning. Tax can so often can be just backward looking. And you worked at PwC, I worked at PwC. I was in the global mobility team, so we were serving those assignees, right? And your company was paying for your tax return. So we weren't necessarily doing advanced tax planning. We were basically handed the file and told you have $1,500 or $5,000 to do this corporate professional tax return. Don't go over the budget.
Yeah, you're part of an industrial machine at the end
Yeah,
of the day.
exactly. Yep.
Yeah, definitely. But I think your name says it all, right? Like connected financial planning. It's all connected. Like you can't
Yep.
just do your tax planning and think that you've got everything covered. You have to the financial or just the financial planning. It's all connected, and you kind of need the whole system. And I think what you're providing is a missing link for a lot of people on the financial side. So why don't we, before we get into like the nuts and bolts and the technical parts of this, tell us how, because you're living in Switzerland, right? And you've been there for a while. Tell us, how did you get to Switzerland? How did the firm, how was it born? Because you started as a tax person.
Yeah, so back in 2011, I was fairly newly married. We were living in Boston, and I felt so bored with my life. I realized like I could already see the future. And it was like, okay, we're going to buy a nice house in the suburbs. We're going to have 2.5 kids. We're going to have some nice cars. We'll probably buy a Cape house. Oh my God, I hate my life. This sucks. How do I get out of this? My husband had been thinking about doing a PhD, so I was really encouraging him to explore what that would look like. And we were looking at programs in Boston, out in California, and then something in Switzerland came up, and I said, oh, look at that one. And we ended up realizing that he would make twice as much doing his PhD in Switzerland than he would in the US. And he would be able to finish the program in 5 to 6 years versus like the 7 to 8 years it takes in the US. And I was like, well, this has really become a financial decision, so we're moving to Switzerland. So we moved in 2011, which happened to be really lucky timing for me because FATCA had just kind of really blown up in Europe and in Switzerland. With all the banks here, everyone was looking for someone who had seen a US 1040. And I had done some volunteer tax work for the VITA program. I don't know if you're familiar with that program.
Yeah. No, I taught at an MBA program, and that was part of the program. We did the VITA program for volunteer. I forget.
Yeah, so for background, for if you haven't heard of that program, it's run by volunteers. I was one of many accounting students who was helping volunteer in low-income inner cities, serving that community. And I had written my senior thesis on the power of the earned income tax credit in low-income communities. And so I had kind of got that bug for tax through the VITA program, but I never thought I would have a career in tax, if that makes sense.
Yeah.
So I show up in Switzerland, I'm looking for a job, and all of a sudden I realized all these firms want to hire me. Like all the Big Four, all the banks.
In Boston.
No.
Oh,
I actually had landed, was doing insurance, and then I landed my dream job as a travel agent because I love to travel, and
nice.
I traveled a lot.
And so we were insurance too.
Oh, okay, yeah. So we were doing stop loss insurance with Sun Life.
Okay, so travel agent. So this is all kind of coming together, like a
travel agent. I had really had an itch to get out, and so we saw this opportunity, and I was like, let's just take it. And then we landed here, and I'm like, okay, what am I going to do for work? Like, I'm 24. I'm just starting my career, and I really need to figure this out. So he was set with his PhD, and then I started interviewing for jobs, and I got really, again, timing is everything. Would I have gotten a job at Big Four in the U.S.? Probably not. Like, right, I hadn't done my CPA. I wasn't even an EA at that time. Like, I wasn't a traditional Big Four hire, but I had seen a 1040. And again, I'd seen low-income individual 1040s where we were focusing on getting refunds and opening up bank accounts. And all of a sudden, I'm working for executives in Switzerland and throughout Europe, completely different. I remember the first time I saw a Schedule D was working at my desk, and that's a capital gain loss schedule. I was working at my desk, and I told my boss, like, well, what is this form? And she's like, what do you mean, what is that form? It's a Schedule D. And I think they were like thinking, oh my God, who did we hire? But again, it was just because my tax experience was really purely volunteer. I didn't have an accounting degree. So I'm so thankful and grateful for that opportunity. I worked there for a couple of years, and my boss ended up coming over from the Boston office on secondment, and she was a CFP, and she was like, oh my God, you would make a fabulous CFP. And I'm like, what's a CFP? And she's like, you get to do that forward planning that you're always like craving when you're asking, we're sitting there and having questions, you're always thinking ahead, where our job and our roles at that time had been so backwards thinking, and it just drove me crazy. And I was like, I don't care.
They're telling you to stop. They're saying, thinking so much, Arielle.
Yeah, stop thinking. So I became an EA. We were in Switzerland for a couple more years. I stayed in boutique tax firms, and then we ended up deciding to move back to the US. And at that point in my life, we'd been in Switzerland for about 6 years, and I was thinking, oh, I'm ready to go back to the US and really start my life. We had our first daughter. We really wanted to adopt another child, and I was just like, how do we start our life? And it felt like we needed to go back to New York to do that. We bought a house, we got the 2 cars, all of the things in the suburban, white picket fence that I thought I wanted. Yeah. And very quickly realized I was bored again. And I didn't fit into America suburbia. I was really struggling with the consumerism and the overconsumption and the waste. It was really, really hard for me, and it was so jarring. Another thing I found, making friends we were in like a small town, but everyone else had kind of like stayed there or was there for work opportunities. But it was just kind of like everyone was like busy, and I'd be like, oh, let's do this or make plans to do this, and it felt like it was so hard to break in. And I hear that from expats all the time when they're moving abroad. They're like, oh, it's so hard to break in. I also found that like in the US it was kind of like hard to find your groove.
Especially
And
coming
we found our
back.
people. Yeah.
Yeah, I got you.
So very quickly, my husband and I decided we were going to have a competition to see which one of us could get a job abroad first. And I thought it would be him because he had a PhD and he was an engineer and he was brilliant. And a firm in Berlin ended up contacting me and they said, hey, we really want you to join this fintech startup and be our US tax advisor. And I was like, and basically tell the engineers how to build the software. And I was like, that's really interesting. I could do that. And if it gets me out of New York and back into Europe, let's go. So we moved over to Berlin. We moved at the end of 2019, so August 2019. And then, of course, we all know what happened in 2020. The world shut down. And in Berlin, that shutdown was so hard. You could have like 5 people in the supermarket. We lived across the street from the playground. The playground was wrapped up. Like it was just like so terrible. And I was like, I cannot live here with 2 children in the middle of a global pandemic. Right. So we Googled where was the best place to live in Germany because we had German visas at that point, and we moved down south. I also at that time got another firm writing to me and they said, hey, you're a unicorn, you're a certified financial planner and a tax person, come work for us. And I was like, okay, yes, I can do this. So I went to work for them and we lived just outside of Munich. And that, I would say, even looking back, were probably the 2 most magical years for us when we lived in this little town called Starnberg, just outside of Germany. It was like on the lake with the mountains. I mean, it was just perfect. So then my husband ended up getting his dream job back in Zurich. And so he commuted for a year, and then we decided we were going to make that move back to Switzerland. And I had been thinking about starting my own firm and realizing I think I'm ready to do this. And I had been so thankful because I had worked at a startup, I had worked at a small firm, and then I realized, okay, I have seen how they make the sausage. I can also make the sausage and kind of take ownership in my life at this point. And we decided that when we moved into Switzerland, I told my husband, I said, we're going to move into the most expensive like country/city in the world, and I'm not going to make any money. Like, how does that sound? How does that sound as the thing? And he had been on a corporate assignment, which I think we all know how cushy those are. Right. And he was going into academia. And I said, do you think we can do this? Like, we had our financial plan. And he said, yes, I think we can do it. And so I launched almost 3 years ago. And really terrified how it was going to go. But within 3 months, we had broke even to all of our startup costs. We've been hiring employees, we're expanding, and we've been on a wait list for over a year. And so now, Alex, I'm like you, I'm so passionate about figuring out how do we elevate this space, because there are not enough professionals in this space to serve the demand. And one of the things that I've noticed is you can't really Google yourself or ChatGPT yourself out of some of the planning or tax considerations of being a US expat, because most people don't even know what questions to ask, because a lot of the stuff that we navigate is not logical. It doesn't make sense. It's not your gut reaction.
Right, for sure. Yeah, I mean, you're probably like me. I mean, not only do a lot of my clients or people that come to me with the ChatGPT research, but they also will send me the actual ChatGPT research. Like, hey, this is my plan. But yeah, it's like anything. It's a garbage in, garbage out if you don't know. And I do the same thing. I mean, I use ChatGPT in all of them every day, but I'll ask 3 different things the same question. And I have to figure out, all right, which one is the right answer? Because I'm only going to ask it questions I already know the answer to
Yes.
to help me formulate it maybe. But yeah, I'll get crazy answers sometimes, so it doesn't always work. But that's an awesome story. Your kind of origination is similar to mine in that I think it helps. Like I worked at a big firm. I also worked at a one-man shop where I instituted e-filing for this guy in 2013, where it was even required, but he was still paper filing all forms. I definitely learned how the sausage is made in that scenario. But yeah, you kind of see both sides of everything and understand like where are the places that people actually need the most advice. And filling out the forms is part of it, but the advanced planning a lot of times is what people to me, I mean, and like we could go down an AI rabbit hole, which we don't need to go there. But when you think about it, that's the piece that's not AIable at the end of the day. You can do things and fill out forms, but at the end of the day, the real value that I think we can provide clients is giving them that advice, the advice going forward, and whether it's tax planning, financial planning, whatever. So yeah, awesome backstory. So your company, Connected Financial Planning, I mean, it started in Switzerland then, and so you were kind of
Yep.
focusing on, I guess, give us a little background on the type of scenario. So are you looking at like retirement type planning or any type of investment planning, like a new family moving to Switzerland, or is it kind of all of the above?
Yeah, so we are trying to be more focused on the countries that we serve. So I don't support all countries. My focus is really knowing Germany and Switzerland really well. We also have a few clients in the Netherlands and Portugal and a couple of the smaller countries. I don't do some of the really big ones. We refer all out for, we don't do the UK, I don't do France, I don't do Spain, I don't do, did I say Italy already? But some of those big countries that people think about in Europe, I'm like, I don't do those countries.
Right.
So, but we'll occasionally do some smaller countries because there's just really no advisors, serving Luxembourg. So sometimes we'll just kind of help client out in that case. And then from there, my favorite clients to work with are, I would say, what I call emerging wealth, right? And so they're coming over and they have really good paying tech jobs, but maybe they're still working on their first 500,000, but they're making 350,000 a year. And they're thinking about, they're having kids, they're thinking about buying property or buying a holiday home somewhere. Their parents are aging in the US. We're thinking about college planning. Maybe we're getting divorced now. I mean, there are so many like moving parts. I really am drawn towards those families. And I don't know if that's just kind of like, because that's where I am in my life. And I just am thinking about these questions all the time. I guess being a cross-border financial planner is a little bit selfish. I have to figure this stuff out too. So those are the things that we do. But I really think of our planning as very holistic, right? So it might be running retirement plans. Am I going to be okay, right? That's really, when people are coming to us, that's what they're looking for. Am I going to be okay? And a lot of times our clients are so self-selecting, right? They're already thinking about their finances. They already have a good tax professional. They already natural savers. So when they come to us, a lot of times we're just giving them permission.
Yeah.
Yes, you can buy that second home. Yes, we can think about buying a house in Switzerland. Yes, your parents are gonna be okay. So I love serving those, but we also have some people who are retired, right? And they are just looking to kind of help us with, especially like currency management, right? Right now, when we've had this huge kind of swing of franc and euro against the dollar has weakened. How do we manage that? And so much, I think back to like last year, so many of our recommendations are just risk management recommendations. We were saying we recommend building up a reserve of 2 or 3 years in this currency because you're retired, you're living in this local currency, right? Thinking through those blind spots, being a thought partner, that's so much of what our job is with our clients.
Yeah, definitely. That's where I guess it's a different, like that's where the planning comes in, is being, yeah, being the thought, especially on the emerging people. And that's a lot of the questions I get. How do you manage the different country scenario? So if you have a family moving to Switzerland, and because the hard part is they don't know if they're going to stay in Switzerland. To me, that's the hard part from a tax planning perspective is should they, like they need to start saving or continue or start saving for retirement. They may stay in Switzerland, they may move to Germany, they may come back to the US. I guess, how do you navigate the different country tax rules and where to save, which country to save in? I'm just curious. And I know it's going to be very specific to the individual. Like there's not like a one size fits all. Like,
I love that you said, how do you handle it in Switzerland? Because that to me highlights like the value that our firm already brings because right there's 26 different cantons in Switzerland, so my advice for someone who lives in Canton Zug is going to be different than my advice for someone who lives in Geneva, right?
yeah, that's interesting. Because actually, I had a client that moved to Switzerland. I don't remember which canton, but yeah, they were receiving IRA income from the US. And there's a different ruling depending on the canton you're in as to whether how that IRA income was taxed or something. So yeah, it's a very different scenario depending on where you are, and only in Switzerland.
Yeah, that could be applied throughout, I think, Europe more generally, right? Some countries have like states or regions where, just like in the US, we have states, and you might have different tax rates across different states. And even in some different localities in the US right now, we have those local tax. I always think of Ohio as like the bane of my existence.
Right.
And I think Pennsylvania does that. Those are like the worst. And so it's the same thing. Whereas a client in Germany, we only have a federal tax system in Germany. So we're only really thinking about what's happening in Germany. There are still some slight tax differences on location just because we have this solidarity surcharge. If you're in the West, generally it's like one federal system, which is different than Switzerland.
I got you. You're obviously helping people plan for how they invest their money or what the impact is, or helping them plan for investment. But are you actually helping people invest their money? Like putting
Yeah,
things
absolutely.
in?
Yeah,
Okay.
so I think it's important to understand we work with clients all the time, right? They're calling us and they haven't moved yet, and we're doing the pre-planning. And honestly, those are my favorite calls. And Alex, I don't know if you feel the same way, but like when people call us before they've moved, that is like the best, because then we can actually do the planning. We can review, what do you have going on now? Which state are you in now? What is the tax exposure now? And we can very easily compare it. What is it going to be when you move? So that's like the first thing to consider. But then we have clients who call us and they're like, we moved 7 years ago for a 3-year contract. We weren't supposed to stay. And this is a client that we're onboarding right now. I have over 1.5 million Swiss francs, and I have not invested it because I kept thinking we were going to leave or go somewhere else. And I just kept saving. And now I realized I should have invested it. What do I do? Right. And so we're coming up with plans, right? And I'm like, if you've just saved 1.5 million, maybe we don't want to just put that all in the market. We know time in market is the most powerful thing, but there's also that emotional component, right? Like, do you really want to just take this thing that you've had and you have got that emotional tie to it, stick it all in the market and see it potentially go up 20% tomorrow or down 20% tomorrow, right? Like I can't predict the future. So we're coming up with the actual plans, which currency, how do we hold the money, right? Because as you know, as U.S. citizens or U.S. tied individuals, so even if you're a U.S. green card and holder and you're moving abroad, we're reporting everything back to the U.S. So we always have to have a U.S. lens, which means we're not going to be able to potentially access the same benefits in Switzerland or in Germany or across Europe, where there are the local tax incentives that say, hey, we really want to incentivize, right? This is what tax does. Tax policy is so interesting. Economic policy is so interesting to me because it's literally, what are the levers that we can pull to make people produce the outcomes that we want, right?
Exactly, yeah.
And so you think about, what are the incentives in the US, right? There's a lot of incentives around owning real estate, right? It's really interesting. There's a lot of incentives around having children. There's a lot of incentives around saving for retirement, okay? And that's, every other country in the world does the same thing, right? But we have to now walk the tightrope of what are we allowed to do in the local country as a US person, because we don't always have the same access, right? It might depend, our access might change depending on the visa type we have, depending on how long we're planning on being in a place, right? We don't want to sign up for a really...
Even access to the U.S. market as well, because it shouldn't matter. But I've had clients that literally, they'll send me a letter from Fidelity, and Fidelity says, you have 60 days to take all your money out of this account because they have an address in Italy or something. And I actually had a meeting with a financial advisor in the U.S. yesterday, because I've always tried to understand that better. And there is no rule. It's not like there's a rule that says you can't invest someone's money that's outside the U.S. It's literally like individual specific, or maybe like branch or something specific. But yeah, so that's a huge impact. I mean, for the expats that I see a lot is just the U.S. access to funds.
Yes, I completely agree. Your access changes when you have an international address. Some banks and custodians are happy to continue to support you. Charles Schwab, Interactive Brokers, they support clients all over the world.
I've had Schwab kick people out, which surprised me.
Oh, it depends on the country. Schwab does have a jurisdiction.
They have certain countries that they will, and I can't remember what country it was. But and that can change depending on the political environment of the time, So it's complicated.
Yeah, it is complicated. So custodians can change, access can change. I mean, this goes back to we don't always know how long people are moving abroad, especially if they're moving for a job, right? And so when someone calls me and they're going on a true expat assignment, my employer is putting me on assignment. I'm going to stay and continue to pay US Social Security. We are keeping our house. Maybe we're turning into a rental for a year or two, but we're going back to that house. We're basically just abroad. I always say, I don't really see a reason for a 1 or 2 year assignment to suddenly alert everyone that you've moved abroad, because the intention is you're going back. When you're corporate, like most corporate policies, they're going to basically tie if you have tax equalization, they're going to tie that all to your state of residence, right? And so to me, we have not actually broken our ties. And I would encourage you to kind of continue to keep your banking and financial life as normal as
Keep an
possible.
address in the U.S., use a friend's address, get a virtual address.
I wouldn't use a friend's address, honestly. I don't know if I want all my financial documents, but I would keep an address, either if that's my home address because I'm keeping my home and there's a mail forwarding company or it's a P.O. box, something with a scanning option. I would keep that address because the intention when we leave is to come back, right? And now, that intention can change. I see that all the time, right? We thought we were going to be abroad for 3 years and now it's been 7 and oh my gosh, like we've been localized and we want to sell our house. So the planning opportunities for someone who's maybe only moving for 2 years, well, we're thinking about what are you paying now? What will you pay in the future? And is there any interesting opportunities? Should we be taking advantage of capital gains or doing Roth conversions or doing something during this period because our tax rate is suddenly lower? And this is especially powerful for people coming from, I always think of like California or New York or Massachusetts, right? These high tax states. And now maybe if we're moving to Switzerland, we're actually moving into a lower tax situation. So that's one thing that I'm always thinking about. And then if we decide to stay, we reevaluate, right? Like what makes sense at this time based on the facts and circumstances that we know. Because I think it doesn't get easier as an expat. There's always kind of that unsettled feeling, I think, for a lot of people until the passport.
Right, there's no certainty. You're a perfect example. I mean, you went to Switzerland, you came back, and you're like, I got to get back. You went to Germany, so I mean, you move around. That's kind of the kind of person that leaves the U.S. and moves to Switzerland is probably the kind of person that may not stay in one particular place, So like, you don't know at the end of the day. So you plan accordingly. Because to me, the main problem like as a non-financial planner, I am trying to, with my clients, I'm trying to avoid foreign mutual funds because of PFIX. That's like a standard that I set. And then if I know or the expectation is for it to be a short-term thing somewhere else, it's keeping the assets in the U.S. That's generally what I tell people. I tell them to go get real financial advice from people. But from a tax planning perspective, it's save taxes, but also keep things simple. And a lot of times, a U.S. person starting to invest outside the U.S. in foreign and non-U.S. things can complicate things. I guess how do you balance that, like the complexity of investing in a foreign jurisdiction with the benefit?
Oh, I think that's a great question. And what I always say in cross-border financial planning, the complexity will find us. We don't have to go and find it, right?
Right.
Like don't worry. And because sometimes I have clients, I work with a lot of engineers, right? And they're like, oh, we could do this. And I'm like, oh my God, like, please don't worry. There's going to be complexity in your plan.
People get churning on all these ideas, especially because there's so much information out there. Like people can, by the time they come to me, they've already have their tax plan. They're just getting me to confirm it in a lot of cases. And then I have to backtrack everything. But then it's balancing that complexity. It's like, you could do that. It's going to save you $1,000 in your tax return. It's going to cost $5,000 more, or something.
Yeah.
But yeah.
So I'm serving U.S. citizens and their families living and working in Europe. Our primary custodian is still Charles Schwab in the U.S., right? And that is because for most clients, that fits the need. And we just basically take extra precautions to think about how are we receiving dividends? How will that be taxed in the other country? How are we receiving capital gains or interest? How will that be taxed in the other country? Especially when we're thinking about higher tax countries and in euros, especially with the currency movements. Is this going to be a gain or loss in Germany, right? That's a huge deal. I was just talking to someone today and they were like, oh, why should I move my funds over to you? Because I love my guy at Merrill Lynch. And I was like, does he know anything about Germany? Like, at all? And he was like, no, but he's done really a great job for me. And I'm like, okay, but when he's looking at that account and he's thinking about tax loss harvesting, he could be those could be gains in a different country, right? Once you convert everything. And so I think it's really important to understand and educate consumers. Again, I don't want people to blow up their financial lives to work with us, and it really depends on how much money you have. Let's just be honest, okay? If you have $200,000, you probably be totally fine just keeping like your local person if they're happy to work with you. But once you have a certain net worth, you're really going to be penalized by not having someone who's thinking about your situation holistically, especially if you're moving to a higher tax country, right? Or taxes are just different. The exposure is different. I think about all the time our clients who are navigating inheritance tax, right? We don't really have this concept of inheritance tax in the US. It's not very prevalent. I think less than 1% of Americans are going to be subject to US federal estate tax. So that those people are kind of like, well, my parents have done it. They've got everything checked out. We don't really need to do anything. And it's like, well, now you move abroad. The rules are completely different. And if you're just working with local advisors or your parents' advisors in the middle of, Minnesota, and they've never seen a foreign tax credit or 2555 or foreign investments, if you accidentally kind of get tied into this stuff, you are not actually being served appropriately.
Yeah, definitely. And like you said before, it's much easier on the front end, right? So if you know you're going to be diving into that world, planning ahead from the tax perspective and the financial perspective really makes things a lot easier. But I think, does Switzerland also have the wealth tax?
Yeah.
So, I mean, that's another aspect of it that you don't think about as an American. It's just not something that comes up as much or ever, really. But
Yeah, and I love this because again, when people are calling me and we're doing pre-planning, this is where we can add so much value because we can think about, where do you want to live? Oh, well, all of our friends are living in this canton, and why do they all live there? Oh, the taxes are really low. Cool. Taxes are like a seesaw, right? And so in Switzerland, if you pay the lowest tax, you're just going to be writing a bigger check to the US. And so you kind of have to decide, how do I want to live? And sometimes we can optimize that a little bit, right? Because we do have, if you are able to take the foreign earned income exclusion for some reason, then there's a housing exclusion. And so maybe we can increase that and not owe as much potentially in the US. But it really all depends and comes down to which canton are you living in, which state are you living in. One of the things I've always noticed and found interesting on the foreign housing exclusion is you look at the cities where the embassies are, and the exclusions are insane, right? Like in Berlin, I think it's like some $60,000 or $70,000, and Geneva, I think, is like $80,000. I mean, you can kind of look and see some of the political, pressure or kind of outcomes, negotiations.
Those are based on the cost of living.
Cost of living, yeah.
Adjustment tied to them. Yeah, no, it's interesting. Yeah, there's a lot of levers to pull at the end of the day, but it is, especially like in Europe in particular, where you're going to be taxable in that country, it's a balancing act, and it's kind of who is getting the money at the end of the day. It's in one pocket out the other. But yeah, you're paying the higher of the two rates in those cases. And it's just and the other aspect is timing, because one is tax. You may be taxed differently, but another problem is, when are you taxed on that income? So you start looking at things, and then you can lose that ability to credit things. Like if the U.S. taxes it one day because your financial advisor in the U.S. implemented something like tax loss harvesting that helped you in the U.S., but it created a timing mismatch of when you're taxed in one jurisdiction for the other, you've just kind of shot yourself in the foot.
And that is why I don't do the UK. UK is a completely different tax year.
Right.
And right. And so I always think about that. And I'm like, oh my gosh, if you are moving to or thinking about the UK, find a UK specialist. There are a number of people who only do UK US all day, every day. Work
Yeah,
with one of
exactly.
them, right? I would say, and we've talked about this a little bit before. I say that about anything. Don't find someone who's a generalist. I can do anything, I'll figure it out. Work with someone who's really a specialist and understands your situation, and bonus if they have some like lived experience actually doing that, because I think that creates just a
Yeah,
different
definitely.
level of kind of empathy of like all the other things that are going on in the
Yeah, definitely.
situation.
The practical experience definitely makes a big difference. So if somebody comes to you, so if somebody, if I was looking to move to Switzerland and I need to start investing my money, what would the process look like with you and your firm? Like kind of getting onboarded and how you could help with that situation?
Yeah, so we onboard we're very intentional at this point, right? We have a 30-minute complimentary call for people who are interested in ongoing financial planning services. We no longer have capacity to just have I have a quick question calls. So we also now offer a 45-minute basically expat expert session where you can pay for our time and expertise, and we'll get right on the phone with you and we'll go right into your situation. So that's kind of like you kind of decide which avenue. I'm so proud to say, like, all of our fees, our services, everything is transparent on our website. So there's no surprises coming into that call. You know exactly what we charge, you know exactly how we work. And then once we determine that we're a good fit, we actually normally are operating on a wait list. So it may be that we agree that we want to work with each other. We'll send over that engagement letter. You'll sign that, and that's really what would secure your onboarding date with us. Once we get to that onboarding date, we are so excited to kick things off. We have everything set up in advance, and we start a very intentional onboarding process that can last anywhere between 3 and 6 months, depending on client complexity and situation and kind of urgency. And we go through all of your documents, right? And tax to me is such a huge component of making sure you have the right team in place. Then we go through your cash flow. We do a values exercise, because I find with the clients that we're oftentimes supporting, I mean, let's be honest, we're really working with the top, 5 or 10% of wealth, right? And so our biggest resource becomes not money, but time.
Right.
And really getting intentional about, like, why are we doing this planning? What is the purpose of this planning? And once we understand those values, we can define goals. And goals are what I can actually put dollar and franc signs to, or euro signs to. And that's what
Right.
I really care about. And so once we have those goals, we can start to run those fire drills, right? For so many of our clients, and I don't know if you feel this way too, but like there's been this shift in retirement. I just like hate even using the word retirement,
Yeah.
because it's like we saw our grandparents or maybe even our parents retire at 65 and live for another 10 years and go golfing, go on some nice holidays. And honestly, most of our clients don't want to do that. They're working really intense jobs. They're working in big tech, in pharma,
Yeah. No,
at
it's interesting you
startups.
said that. I feel the same way. Like when I think about retirement, it's like that is not my goal, is to like
No.
reach a certain age and stop like
Yeah.
doing work like
Yeah.
that. That's not really what I plan to do. And I think you're right. I think it is like a cultural shift. Like, and I don't know. And maybe it's the way people work too. But
It's really
um,
intense. I mean, a lot of my clients are pulling 12-hour days all the time and working weekends. And right, and that's the expectation in tech, in pharma, in startup culture. And
right.
so we are all recognizing, wow, this is not sustainable for like until you're 65.
Right.
Maybe we're going to get you till like 45. And we're going to have so much money built up at that time that we're talking about, do you want to do consulting? Do you just want to work a less stressful job and maybe you make a quarter of what you used to earn, but that's okay. Like we're not doing it for the money, we're doing it for something else, right? We're trying to really understand, what are we trying to pursue? Who are we? So that's kind of like this huge shift that we've had with our clients. And so I'm
Yeah.
really trying to build that into our planning with these kind of like this idea of fire drills.
Right.
When
So you're understanding like their financial picture and who they are as a person. Like what are they trying to do? How much are they working now? Do they want to just are they the want to go to the beach and golf type of person? Are they, want to keep working and do something like you mentioned, like a lesser job or whatever? Figuring out who they are and then building out scenarios
Yeah.
basically for those people.
And we do also work with some individuals who are in their 50s or their early 60s, and sometimes they're thinking they're going to work till 65. And we're having really honest conversations because we see, especially in Europe, ageism is huge. I mean, it's present everywhere, but there are the way that employment law and tax law is set up transparently, it kind of causes ageism. So a lot of people they have to stop by 65 unless they have like a special.
I mean, there's required retirements, and
Like
you're
we have
not like you're either forcibly pushed out, or for some other reason it can be.
And a lot of our clients, we're having a conversation where even if they think they want to work till 65, let's run that fire drill and see what happens if you get a package at 60, because that is very common, and unfortunately it's more common than people realize. Everyone thinks it won't happen to them. It's more likely to happen to them than not, quite honestly. And so just kind of preparing for what that looks like, because a lot of our clients, they're at the top of their career, they're C-suite executives, and they're thinking, well, I'll just do this till 65 and then I'll do some consulting because I don't really necessarily want to retire. And I also say, if you want to do consulting, start 5 years before you want to turn on that spigot, because even if you're really, really good, it still takes time to present yourself in a different light. You're no longer an executive on this board. You're now this different person, and you need to make sure that your skills and what you're bringing to the table, like, people are actually going to want to engage with, and building those bridges can take years.
Yeah, and making sure it's what you want to do too, because maybe it's not exactly what you were thinking when you just start being a consultant, you know. But yeah, that's really important. Like setting realistic expectations for people, understanding what the expectations are, and then maybe having an honest conversation about that as part of the process.
And then we get to investment management. I mean, really, we're doing the investment management towards the end of our onboarding process, because I've come to realize I really can't tell you what to do with your money until I know who you are and what we're trying to solve for. And so I think it's really silly to start an engagement with okay, we'll just manage your money.
Yeah.
It's like, cool. And sometimes I think that's the easiest part, is the money management. And so we try to just be really clear about maybe our firm's a little bit different in that way.
Yeah. Well, hey, this is awesome, and I think what you're doing is providing a really excellent service to people. And so if y'all have questions out there for Arielle, you can reach out to her directly. Reach out to me, because I know you also have a directory of people like in other countries. So if you're listening and you're in the UK or France or something, we may be able to help you find somebody that can provide a similar service in those countries. But otherwise, let us know. Remind us where people can reach out and find you online.
So you can go to our website, connectedfinancialplanning.com. Again, we lay out all of our processes and fees. I'm very active on LinkedIn. I love posting and talking about US Expat issues. And then also I'm the host of Passport to Wealth. So go to passporttowealth.com. And Alex, I'm hoping you'll come on our show on Passport to Wealth podcast so we can also just kind of continue this conversation.
Yeah, for sure. We can dig more into the tax side of things. But that I checked out. I've been watching that podcast for a while now, and you have some great information on there. So actually, I learned a lot about the Swiss pillar system, on the tax system, because that has always been like the bane. I don't do a lot of Swiss taxes, but when I kind of get roped into them in some cases,
I think that
the pillar system throws me
have
off.
this resource, the Swiss Pillar 1, 2, and 3, and that has
probably
been like our... Oh, I also have a presentation on it.
Yeah.
But we've talked a lot because this is like a number one question. And so my goal here is, how do we get good information out to people so they're not trying to Google this to death? These are simple questions for us to answer and give guidance for people.
Yeah, likewise. All right, well, great talking to you. And if y'all have questions, I'll put your information in the show notes here so people get in touch with you. But appreciate you coming on.
Great. Thank you so much, Alex.
All right, talk to you later.
Bye.